Good morning. All right, so we're getting close to the top of the range here. The big question is, we going to break out this time, or are we heading back down to the bottom of the range? Well, we'll find out soon enough. So there's quite a number of patterns similar to this, and starting with the SPX here today. We had the rally day a couple of days ago, as prices have moved up, and this was a good sign that this didn't break below the lows over here, or those two lows, and they went up. And I guess maybe whether that was some more short covering or just it wasn't a good buying. It was a nice power trend day to the upside. And yesterday was just the consolidation day, which I spoke about pre-market, that likely that's what we were in for. And so now we've got that, and we've got a 1, 2, 3 type of a pattern here on the SPX, whereas now we see if prices can push up past. Well, just got to get past the inside bar here to trigger, and then of course the assumption is, because of the move up, we got to take out the wider range bar. Now the top of the range isn't that far away, so it's not the textbook type of a pattern that we look for that might have been down here or even down here coming out of a base, not on a retest. Either way, we got continuous sloppy type of patterns here, but the move up is up, until it's not. So as we get closer to here, we know that the sellers are going to show up. It's just the way it is. And whether it goes sideways, double tops, or sideways and breaks out, we're just waiting to see. So as we get further into this month, of course, then the debate is already happening. Are they going to lower interest rates? Are they going to stand pat? Whatever. It's the same routine, and we'll see where it all goes. We've got different earnings coming out. Netflix is up this morning. IBM is down. So kind of neutral as far as that goes. But overall, you can see a lot more green than red going on here. Markets are up a little bit, and let's see where they're all at. Diamonds. So you got your 1, 2, 3 type of pattern. Again, it's not textbook, but we don't go with textbooks all the time to say we just have to have that textbook pattern. It's just not. It's too restrictive. Let's put it that way. So we look at the textbook, the ideal, and then look at wherever the variation might be that forms on that day. And then, go put that pattern within the context of the location. So, meaning, is it already at resistance? Is it breaking out? Is it at support? And of course, we look at the internals. So what we see here, let me just get my little drawing thing out here, was that the topping tail happened right at the top of the range. And when it tried to go down, it didn't. And the fact that it didn't fill the gap was a positive. It gapped up. Yesterday, we had the inside day, and now we see if it can push higher. So I don't know about this, how accurate that is, but when we'll look at the futures, we'll get a better insight into that. But if this is real and we see this dip and bottoming tail bar, well, then that tells us that there's buyers on dips, and that's a good sign. Prices are, trending up. And so now we'll see if prices can clear that high and then push up to the all-time high. So as the market opens, we'll see where things are at here in a little while. And then, if you're looking at the diamonds, see if they can take out that level. And spiders, are going to be similar. But we looked at SPX. They're right below this 300 level, and you'll see the futures. Well, you can see right here, they're already above, and they were above there yesterday. So futures are anticipating that these markets are going to go higher. We'll see if they actually follow through. Sometimes the futures get ahead of the cash index, and maybe that's a leader. Sometimes it is. Sometimes futures being a little bit too aggressive, it doesn't happen. So as always, we're just going to see how it unfolds. Right now, the price action is overall bullish. Yesterday was a resting day after the power trend day, which is bullish. And now the question is, can it take out the high? And if it does, well, then it should take out that prior day's high and attempt to move up toward the all-time high. So that's the bias. And if breaking below yesterday's low really wouldn't mean a whole heck of a lot. But if it was to do that, we want to see it spring right back up again. Breaking below the rally day, and especially a close below that, that's going to change the look of things completely. But we'll see where this goes by the end of the day. As always, Qs, right, looking much better. A larger green bar, right, closing near the top of the range. You have the same neutral inside day yesterday, and resting day. So now we certainly could have another resting day. We could have what we call a 1, 2, 3, 4 type of trading day. You say, well, what is that? Well, that's even a better pattern where it takes out that low. Right? Assume there was some selling, but it springs right back up again. And so if we were to get a bar like that, I think you have to think about getting long at the close. That's fine. And if not, you want to wait for another day. If it takes out that high, you definitely got to press the buy button looking for it to go higher. So we'll see how today unfolds, but there's some insights as to possibilities, but for now, if it takes out the high, our bias is going to be that it's going to go higher. And so far what we see pre-market, it's acting pretty bullishly, and got that bottoming tail bar similar to the Dow. So that dip, I can take a look at the 5-minute chart again and see what that looks like. 194. That doesn't. Oh, I see what happened here. I've got this on automatic. So it looks like that's probably a bad tick. When we go to the futures, we'll see. Well, let's just do that. The S&Ps. Okay, so S&P's bullish price action at this resistance line up here. This was from the other day. I put this up there yesterday or the other day. And so what we see is the pop up, and so far consolidation at the top of the wide range bar. So that's bullish. And so just kind of like chopping around here, this price action right here is what we see right there. There's the bottom of that bottoming tail bar. So the 5-minute chart coming up into this resistance, forget the green line that was just there from the other day. It's at resistance. We got a little topping tail bar. This should fail to go lower. And it should fail to go lower because this dipped down and it came back up. The depth of retracement here, this should go sideways, or if it dips down, it should come right back again. And that price action would be in alignment with the bias from the 60-minute and the daily. And the fly in the ointment, so to speak, is the fact that we've got, let's move this up right up to the top of the range there. It's not that far away. So just keep in mind that, while this was choppy down here, you can see this was a big red day at one point. It came right back again. It attacked the resistance. It acted well, back up, so on and so forth. It isn't that far. So that, ultimately to the top of the range there. And remember, the prior times that this has come up here, especially for the S&Ps, there's been that peekaboo to new all-time highs and was a trap. It doesn't mean we're going to get the same thing this time, but it's something to keep in mind. Now, this prior time here, for sure, the wrong way option traders were all in, and with calls, and we can look and see where that was over here. According to our internals, there is gas in the tank for this market to push higher. So you can see the prior times up there. The sentiment was up into the bearish area, especially here. Over here, it was in the beginning of the bearish area, right, that lower band. And here, we're still neutral. So there's gas in the tank. Breath says there's gas in the tank. Down here, the day-to-day breath, it's been kind of, neutral at best and not really much there. We have internals here suggesting or supporting at least getting up to here. This can obviously change rather quickly, especially if we were to get another power trend day to the upside. But maybe what this is telling us, we never know for sure, but we look at what is here, and this says that there's gas in the tank, as I said. So coming up and pushing up through the all-time high without these into at least the beginning parts of the bearish level is supportive of holding that level. But all we could do is look at the tea leaves and see what they suggest, and then going back as simple as the prior day's bar or low is our first reference point of support. And as long as it's above that intraday, you certainly can't get too bearish unless it explodes higher and you get a climactic kind of a sell setup. And we certainly don't have that. All we have right now is bullish price action, right? Push up, basing to build new support, push up, pull back. So all of that is suggesting or supportive of a bias that this can push higher. It doesn't mean it could be a broad-based rally. As you look at a lot of stocks, there's a lot of sloppy stuff out there for sure. But, things that have been doing well should continue to do well. Like the Roku and NVIDIA that did well yesterday. And, there's like other stuff that looked like it could go higher, like this MU. But it gave up a lot yesterday. So it's not throwing darts in this market. It's, picking a good. Hold on, guys. All right, guys, a little episode there. All right, let's look at the rest of the futures. No. My wife brought in the dry cleaning and the all the clothes and everything. The dog saw that and went bonkers. All right. She's still a puppy, so anything that looks unusual is let's just say can get her going. It could be measured. That's a good point, which I didn't think of. But if MU can negate that red bar, Tony, absolutely. So that is an excellent point. Set an alarm at the high of that red bar, and if it can move to the top of that, absolutely could have a measured move, maybe to get back to $50. So I'll set an alert on that in TC 2000 to keep an eye on that today. Thank you. All right, so NQs, the stronger, and just under that 8,000 level, which obviously is going to be a sticking point, or should be a sticking point. It's a big number, big round number. It usually is, and the other high up there. Let's just scroll that back, right up to the top of the range up there in August, where the wrong way option traders got loaded up. So bottom of the range, pushing up to the top of the range. And again, we looked at the internals, we see where they're at, but just support, resistance, trading range. There's going to be uncertainty about this pushing higher, just makes common sense. So we'll see what it does. But so far, things look like they're going to push higher. Dow, you can see it's a little chopping around, underperforming there. But it's just one market, and sometimes it underperforms, sometimes it outperforms. And you can see actually a little bit of a lower highs there, but didn't quite poke up as high. Anyway, looks okay still. Just looking at these different markets, we look at which ones are showing relative strength and which ones are showing relative weakness. And clear, this one's showing some relative weakness, but the weekly chart is still constructive. Right? We went over this the last couple of days with the dips down over the last few weeks, and then last week being the inside week and higher low and so on, pullback kind of a hook pattern there. So that is supportive of going higher as well. And the weakest, right? So bringing up the rear concept, what we spoke about, that this one could have the best potential to be the outperformer because it had more room to move higher since it came down so much. Now that it's done that, you know, we look at where it's at. Just looking over to the left there, and you see there's a little congestion here, but it's been dealing with it multiple times. And there's a little lesson in of itself as to when you might discount this area like that. Poked into it once, it poked into it again, it poked into it again. So each time it's kind of like knocking a brick out of the wall, right? If you want to look at it in that way, and that it's weakening the wall here and potentially going to have the ability to punch through it, especially if the other markets are rallying. That would be the bias to go with, and that would be the reasoning for such a bias. And so if we believe that prices should go up or down, well, we should have supportive technical analysis to go with it as to why we believe that, not just, oh, you know, I'm long and I think it's going higher. You know, that'll get you in trouble if it's not working. So there you go. Oil, just sloppy down at the bottom of the range, but maybe it's building up for the next move up. You know, right now it's so kind of a wait and see. It looked like it was going to go here and came back in again, and so maybe it's just reloading. You know, it's just neutral right now. Bonds, you know, down a bit here today. It's exactly what should happen. More improvement in that yield curve inversion, and we looked at that yesterday. The big improvement that there's been because of the fact that bonds have come down and yields have come up. And just looking over here, right, you've got the 3-month, which is still a little bit higher than the 5-year, but now you've got the 10-year up above the 3-month, and of course the 30-year is up above the 3 months. So there's been improvement along that, and you know, as explained earlier in the week, the transports have come up off of the low, so that's a good sign. So while we're still in a trading range until we're not, there's been a lot of improvements and reason to think that maybe this time it can punch through to get up above that all-time high. Gold still trying to make the turn here with this bullish downward flaggish motion within the uptrend. Maybe. The only fly in the ointment there, of course, is it's kind of been an inverse relationship between gold and the broader market. So if the broader markets are going to punch through the highs, it doesn't seem logical just based on recent price action that this is going to push up at that point in time, but we shall see. And silver, very much the same story, trying to hold this area, trying to get it going with the same, a little more sloppy bullish flag with the tail on the top and the tail on the bottom there, but similar pattern nonetheless. So there you go. And we've got the markets. We'll see if they can pop higher. The top of the range isn't far away, so somewhat limited, but overall, let's say looking for more bullish price action today, and we'll see how it goes. All yours, Dan.
Yeah, if you'll drop the screen. Yeah, when I woke up this morning and saw how much we were gapping, I just immediately thought in my head, this is a 30-minute high day. Remember yesterday we said it was a bullish inside day, and if we could take out Tuesday's high for the 1, 2, 3s, so many things looked higher. And that's my bet right now. You know, they're slopping around here holding the gains, but if they can hold and 30-minute high, we look great. All right. You know what? There's so many gappers. Let's just go right to gappers first. I don't see any problems in our opens. We're 100% long with all of our positions. Long or bullish option trades, that is. And everything looks great. PDT, we entered yesterday. All right. Bingo. This penny stock toy. Look, this is exactly what a penny stock toy does. You know, pump and dump, pump and dump, pump and dump. Little intraday island reversal. Went from 470 to 170 in a couple hours. That's what you get. That's what you get when you play with that stuff. Cron marijuana stock, I don't know what the news is, but that's a pro gap right there. This could be igniting a new move from a downtrend to an uptrend by this big old gap. I don't know what's going on in that stock, nor do I care. But let me put him there. That's beautiful 5-minute chart. MJ, it's gapping up to 20. That's not nearly as bullish as Cron is, but maybe today we'll scan the whole sector. 2 big block trades. Well, that I'm not disagreeing with you, McGraw. You know, you can see the time where the volume spikes are, but this is very liquid. That as long as you can read a 5-minute chart and they are clear bars, then that's liquid to me. That's all I care about. I just don't like the spottiness, the gaps, you know, the difference is very easy. General Motors, they have a tentative deal on their strike. Wow, the paper said that strike shut down over 30 of their plants. No pattern though, so I'm just deleting you. LLNC had earnings, and this is a 1, 2, 3 on the daily. And look at the buy setup here on the weekly. After a greater than 100% retracement, that is a controlled pullback, bottoming tail. That's a beautiful setup right there. And now it's gapping up to 350 though, so that's a big gap. I mean, think about it, $3 stock up 30-something cents is 10%. So I'm not going to rush into it, but if it were, you know, gapping up to 320, 3.25, look at this retest on the monthly. The target would be around $4. So percentage-wise, that's nice. NTNX for McGraw, 27.26. Yeah, and hey, that is a beautiful McGraw reverse heading shoulders. That is absolutely textbook because you need time symmetry. Do you know what symmetry means, McGraw? Look, all these equal bars come down. The time going back up is identical. Now, you know, this part's not identical, but it's a beautiful reverse heading shoulders. So I like it. CCK, its earnings, it shows a print down here at 61.60, but there's no volume. NTRA up 80 cents, 37.10. That would be a day trade only. That was a bearish gap and bar yesterday, but you got a price void here. I'm going to delete it. You know, today I feel like there's going to be so many other good trades. I don't want to get sidetracked chasing other stuff. Now see, this is an example of spottiness, and that's when the market's open even. So I got no interest in you. TCBI, I don't like the way you trade. I can't tell where you're gapping. It's got, you're gone. STI, a bank. There's no pattern. SBNY, I don't like all these overlapping bars and it's spotty. You're gone. SLG, can't tell where you're gapping. We'll come back to you. RLI, overlapping bars, don't like it. Katie, can't tell where you're gapping. Come back to you. KMI, gapping down a little bit, overlapping bars. You're gone. Monster, got a downgrade, 55.80. You know, look at the declining 20, 50. If this rolls over, you know, we'll keep that on our short watch list, maybe for a bear call credit spread. I can't tell where you're opening. Sun, where are these? Yeah, I'm showing pre-market, but I don't know why so many of these are, there's no volume, so it's not printing pre-market pattern for me. We'll come back to you. SNA, we'll come back. TXT down a little bit, 48.73 down here. That's a bearish gap. We'll come back. Pool 205. 30-minute high candidate. You know, yesterday, big old bottoming tail came back. Now 100% retracement. LRCX 239.40. Trading range. Home Depot. Gertz gave us this. So I like it long over Tuesday's high. UNP. You're a mess. We'll come back. Wow, I thought I was going to have more tier ones. I kind of like just trading the diamonds and spiders so far. PPG. Now, if this goes sideways for another week or so, then it'll be a breakout. Oh, daily, weekly, monthly. Papa Mike 80.30, gapping up here. It's a put spread plus 30-minute high candidate. MS 44.70, way the hook up here. That's a big gap, but no pattern. Key relatively flat, no pattern. Honeywell 167. Okay, it's up here. So this is a beautiful put spread candidate, McGraw. Just McGraw under here, 162.50. Beautiful. And that's on earnings, so we should get good juice for it. Here, I'll put them right there for us. Here are a couple that I had from yesterday. MTH. No, it wasn't MTH. It was William. The home builders were on fire yesterday. Cuervo is a 123. I like that. BMCH was a home builder. I would love a 123, which is an inside day, upper third, and then tomorrow we buy over the high of the 2 bars. MA, I like this over Tuesday's high. KNX, I like this over yesterday's high. I forgot if I posted that one or not. Let me look. No, I didn't. Market holding here. I like this. Let's. I don't have time to make it pretty, so I'm just going to give it to them. Buy the high, stop the low. It's that simple. And it's just another trade. All right, continuing here. GPC. Looks like it's gapping down, but there's slight volume. URI. It's getting close to resistance. All right, Netflix. Gap's too big to do anything new. KMI looks lower, 30-minute low. IBM, big bearish gap, but you know, nothing to do with it right now. CSX, I had this on my eye for a put spread. Almost put it in last weekend's letter. Oh, Alcoa, hey, you know, the monthly is not a core trade setup, but this could be what we call intelligent bottom fishing. Here, look at this entire way down, folks. This is the most bullish